people have a real opportunity to differentiate themselves in the marketplace if they're actually solving a problem. If you're just going to be an order taker, this is not the market for that.
Welcome to the Full Disclosure, the mortgage podcast where we talk about what's really going on behind the scenes. I'm your host, Nora, co-founder of Morty, the all-in-one platform for mortgage. Today, I am excited to welcome our guest, Jovica Djurdjevic, to the show. Jovica spent a decade as a wealth advisor before becoming a real estate investor and developer. His focus is to help clients, from individual investors to family offices, to build resilient real estate portfolios while safeguarding capital. Committed to helping others create and sustain generational wealth, he shares insights on strategic investing, risk management, and long-term financial success. Welcome to Full Disclosures, Jovica.
Thank you. Appreciate you having me on.
So to kick things off, sort of as a fun icebreaker, we're going to do some rapid fire questions. These are meant to be quick one answer or couple answer questions, just to both loosen us up and let folks get to know you a little bit.
All right, let's go.
Let's go. Okay. What's harder, wealth advisement or mortgage advisement?
Ooh, I'd say wealth.
What's the most underrated neighborhood in your market?
Ooh, underrated in Nashville. Man, that's hard. Nashville's so overrated in so many ways. No, Nashville's great. I would say this neighborhood called Germantown is my favorite neighborhood ever, and it's kind of a high-end neighborhood, but it flies under the radar. It's awesome.
What industry would you be in if you weren't in real estate?
I don't know. I'd probably be a financial advisor again.
Cold calling, worth it or not?
In 2025, I say no.
And then the most important one, hot chicken or barbecue?
Barbecue all day. Not even close. Hot chicken's great, but barbecue's so much better. So many more options.
That is true. There are more options, but hot chicken is really good.
Hot chicken's really good. The tricky thing about hot chicken in Nashville, though, is there's only a few spots that are actually owned and run by local Nashvillians that have been around for like 100 years. All the other places are like private equity groups that came in like the last 10 years and like ripped off hot chicken.
Yeah. Isn't that the state of the world?
Yeah, exactly.
All right. So, Jovica, what's your disclosure?
Ooh, what's my disclosure? All right. If you are someone who gives advice about money for a living or for fun, and I hear you say the catch-all term that all debt is bad, I immediately know that you don't even know what money is, much less that I should even listen to you.
Tell me more. What do you mean?
It just means you don't understand what money is. The velocity of money, which is the creation of debt, is literally what has allowed for us to go from riding donkeys 100 years ago to you having a supercomputer in the palm of your hands at all times. It's what's driven the capacity for us to develop as a society, being able to move capital around and easily distribute it, to invest it, to grow and produce value and wealth for people. So when somebody tells me all debt is bad, I'm sitting here like, you don't even know what money is, much less tell me how or what to do with it. Yes, you buying a purse and putting on your Capital One for $3,000 is bad. You buying a cash flow producing property at 60% leverage is not bad if the math works. I promise you. It's actually quite good.
What's bad debt? What would you consider bad debt then?
Bad debt is anything that, well, at a core, anything that causes you to lose sleep, right? So technically bad debt to me is anything that isn't creating some sort of value or allowing for you to create some sort of value. But then also, for example, if you...
But how do you define value?
Well, value, I was about to get into that. So value could be monetary value. It could also be, man, I've got all this money in my savings account and that makes me feel good. I just had to go to the emergency room and I hit my out-of-pocket deductible. So I could either empty out my savings account and lose sleep over that every single night, or I could put it on a credit card and pay it off over time and still feel good that I have this cushion. So you're not necessarily creating any monetary value off it. You're technically losing off of it, but you're not losing sleep because you still have that cushion. So that's creating value on that end. So it's an individual. What is your risk tolerance? What is your objectives? What are you trying to accomplish? So again, I just say it's a tool. It can be used good for good. It can be used for bad. I just hate catch-all phrases.
Have you actually heard people say that?
Because it does seem Dave Ramsey has been saying it for 30 years, right? Like, he lives down the road. Yeah, it's insane.
But like as a wealth advisor,
Mm-hmm.
do you get clients who come to you who like are operating based on that assumption a lot?
Not a lot, but I would have folks who would come to me and we just wouldn't work together. I mean, at that point, I don't. So I sold my practice in 2020. I dropped my securities registrations, et cetera. So I'm not a advisor anymore to anyone on specifically financial advising as defined by the industry. But one of the biggest things at the time was always, do we philosophically align? Because if I'm going to have to fight you about every single thing, this is a waste of both of our time, right? And I never, again, don't go blowing cash on things you don't need that are going to put you in a bad situation. But also, I'm not going to tell you to pay off your house that's at a 2.5% interest rate from 2020 over 30 years and three. I'm not going to tell you to do that. It's a horrible idea, in my opinion. The math is not math there.
So if you take that perspective, which I agree with you, and you put that towards our current interest rate environment in mortgage,
Mm-hmm.
how would you advise somebody who is deciding to move from a house in one neighborhood in Tennessee to Germantown, let's say in Nashville?
Mm-hmm.
Their current home is at, let's say, a 3% interest rate. What would your advice be to them?
Well, the first question would be is, are you okay with being a landlord? Because your best financial option is probably holding on to it. Now, that again comes with the caveat. There's a concept popularized by a guy named Garrett Gunderson. He ran a company called the Wealth Factory out of Utah for many years. He's fantastic. He's written multiple books. He popularized the concept called your investor DNA. And he's very much so against the concept of like everybody invests in this or everybody does that, or it's more so figuring out like, again, what lets you sleep at night and what makes you feel most fulfilled. So if you can sleep at night being a landlord, I have no problem with that. I'm keeping that property and I'm figuring out how to get the second property. If you can't sleep at night being a landlord, can you sleep at night letting go of that, 2.75% interest rate? And if you can't do either one of those, then you probably can't move. So you got to figure out which one you're going to make peace with. But again, my initial reaction will be in this hypothetical scenario is like, can you keep the initial property? Can it cash flow? And can you get the second property? Because it's very hard to let go of an asset, which is one of those low interest rate loans that people got over the last several years.
How would you advise somebody who was doing that from a mortgage perspective, right? Because they would likely need to have a mortgage on both properties.
Yeah. I mean, some of the baseline things is, how quickly can you rent it out? What's it going to rent for? Can we offset that income, et cetera? A lot of times I've come across folks that can get approved for both. I've had to do that before personally, get approved for both. It was tight. I mean, we were there on the DTI, but we got it done. So it's mainly educating them because one of the things that drove me into getting my license. So I've been advising folks for years. But once I sold my financial planning practice, I started getting hired as a consultant by financial advisors for their clients on real estate deals. Most financial advisors know how to spell real estate. That's about it. They know nothing else about it. They're in the security space. Love you guys. You guys bring me a lot of deals, but you know it's true. So So they would bring me in, I would charge a fee, I would help underwrite deals, et cetera. Then I got into some development, investing for myself, et cetera. And I was just like unbelievably frustrated by the lack of communication and clarity on like any topic. And one of the things that happened is I was already helping place a lot of this debt for these clients by making the connections. And then I realized like, why the hell am I not getting paid on this? This is insane. And then the final straw for me was I was getting the house that I'm in right now. And we hadn't rented out our previous house. I was going to keep it. And I had already done all the math to make sure that I could qualify for both, right? And we went on a contract in March. We closed in June of that year. So that's 90 days at least? 90 days for you to figure out a problem that you could bring to me, right? They wait 2 weeks. 2 weeks before closing. And they're like, we don't think you'll close. I'm like, I will. What's the problem? And they're like, well, we don't think it'll work. And I was like, give me an hour. I put together a spreadsheet from scratch, send it over. I'm like, what am I missing? And they're like, oh, we didn't catch that. You're right. I'm like, what? How is this possible? And unfortunately, I feel like that's a lot of experience in this world because there's just like a lack of communication. in finance in general, not just in mortgages, but in
Yeah.
banking and financial advisory, et cetera. Like all you have to do is just explain things. Explain the damn thing. So that really pushed me over the edge from bringing together a lot of these business loans and such to being like, you know what, let me go get my mortgage license as well so I can do these deals for folks because they come up all the time.
I mean, from my perspective, I've always felt like it's a fundamental lack of access to yes, like different types of mortgages, but also to the information that you need to understand what allows you to qualify for a deal. So
Right.
how is somebody supposed to know what they need to do to be qualified, right? It's like
Right.
a giant black box because in many ways that's exactly how the industry was constructed, right?
Right.
It's
To be a black
supposed to be a
box.
black box.
Right.
So obviously, part of the reason why we founded Morty was to break down those barriers, to add levels of transparency for consumers. And as we've been more focused on having a platform for loan officers and brokerages to build out their business, it's been like, well, actually, we need to make sure that the loan officers have this level of transparency so that they're able to properly advise their customers. And they need to be able to get it fast, not take days to figure out like what the DTI issue. It needs to be like an hour. It needs to be a
Right.
minute, right? Could you, I'm curious, especially in the business loan side of things, what types of tools or technologies did you use in that area to have the level of transparency that you needed to like properly advise? Or were you just like using Excel spreadsheets?
Excel spreadsheets.
Man.
That whole world is so deep. Like if you bring me I got some friends who are business brokers, and so like if you bring me a business deal and you want me to go package it and then go find a lender that'll go do it, I mean it's Excel and PowerPoint. Like it's completely stuck in the Stone Ages, but that's how they want it, and that's how it needs to be done. And it's longer cycles, oftentimes more complexity, a lot more negotiation back and forth. Like it's not pulling a rate sheet and saying here are the rates for today. Like it's very much so like going to a bank, a community bank somewhere, and being like, here's a deal. Are
For
you
like
interested?
for like a small business loan.
Yeah,
Yeah.
or even a larger business loans. I mean, if you got a portfolio of commercial properties and RV parks worth 30 million, that's a package someone has to pitch to
Yeah.
someone.
Yeah. And
Yeah,
yeah,
so
it's like
no
and
technology.
it's like it's a bunch of people making, well, it's a couple of people making the decision. Like
Hmm.
the underwriting is actually,
Yeah, Fannie and Freddie ain't buying that,
yeah,
right? Like
right.
there's no packaging that
It's
loan
like people
that's
being
staying
like,
on the
yes,
portfolio.
check mark or
Right.
X. Yeah. Mhm.
Right. So oftentimes, that's relationships you've built up with business partners, and I mean, a lot of times, if it's a small community bank, and I know the CEO,
Right.
so it's just a very different conversation.
Um, when you think about how if you think about somebody who is deciding to enter the mortgage industry
Hmm.
and they want to have a better holistic understanding of somebody's like financial health so that they can do like broader advisement, what type of advice would you give somebody like that?
Mm. Man, YouTube University is awesome. You have to be careful because there's a lot of trash out there, but YouTube University is awesome. Like if you can find some folks that are trustworthy, oftentimes they have a lot of content out there. And if nothing else, they can get you to go down the proper rabbit hole to go find what you're looking for. Um, Even something as simple as, I mean, go pay for ChatGPT Premium and talk to the reasoning model and have it give you like test examples and then of potential clients, and then you go solve the problem that ChatGPT is giving you. That's just another idea. But
Like a problem set for like
yeah,
like for math class or
yeah. So, I mean, the reality is like I understand why all the licensing and the exams and stuff exist, but the reality of it is in any field, I mean, I had my Series 65 for years. Series 65, I passed it. Not a single piece of it ever applied to financial advising, right? Like it was just a bunch of laws. Great. Okay. I know that I passed the laws. Wonderful. But okay. It's like it didn't teach me how to interact with the client and explain to them, how to bifurcate their cash flow to open up opportunities, in the long term, or to help them identify inefficient insurances, or how to help them identify fees within their retirement plans that they're not aware of that are dragging down their portfolio. None of that. right? Same exact deal in the mortgage industry is like, okay, you passed the safe exam, congratulations. What's an asset depletion loan?
Right.
Right. Well, if you don't know what that is, go look up what an asset depletion loan is and spend 30 minutes learning about it, right?
Yeah. I feel like the different types of loans and both the different types of loans and the different ways you can structure a loan is pretty mind-blowing, right? The permutations there is just
Infinite.
infinite. It's nearly
You
infinite.
keep wanting to say infamous. It's infamous, guys.
It's infamous. I mean, it is the mortgage industry, right?
That is true.
Um, and so that's why just like the more experience you get and the more exposure you can get, you can acquire, whether that's like through your own interactions or through mentorship or through AI tools that help you really get the exposure that you need to these different types of loans so that you actually know what you can recommend to your clients is essential, especially today because people's needs are becoming more bespoke. I feel like when interest rates were low and the market was flushed with deals, at least at Morty, we saw a ton of conventional 30-year loans. But as you have a more complex environment, the sort of spectrum of type of deals that people are looking for has dramatically expanded, and the amount of consultation that people need has also expanded. And you need to spend the time to know what is there, and you need to find the right tools that can really teach you that, right? Or else you can't be an expert.
Right. Yeah, it's just it's an interesting dynamic, and it's an interesting world, especially in the world that I hang out in. I'm not. This isn't my full-time job. This is very much so a byproduct of an offering that I want to provide to clients that I'm working with anyway. So which inevitably leads to conversations that are not, like I'm not going to open houses and trying to get somebody's first time home, right? That's not. I'll do it if somebody wants me to, but that's not where I'm hanging out and having conversations. So the reason I know what an asset depletion loan is because I was put in a scenario where I was like, oh crap, okay, could we do this? Is this possible? It is. Okay, cool. Like let's learn about it.
How do you find most of the clients that you work with today?
Family offices have been a honeypot for me. For anybody who doesn't know what a family office is, a family office is typically, and you can have fractional ones, but wealthy families will typically have a family office that will manage most aspects of their wealth. Part of that has to do with, you're probably 2 or 3 generations removed from the actual creation of the wealth, etc. So family offices, wealth advisors, CPAs, a lot of those, and then some realtors. But yeah, typically the conversation starts off somewhere like, hey, I've got this client who has X need. Could you, potentially help or potentially, bring some insights? And I'm like, sure.
Yeah. I mean, I feel like you have we've already talked about this, but the fact that you're able to holistically look at a client makes the referral from somebody like a CPA much more interesting.
Yeah.
I also know that you are super active on social media. Can you share a little bit about the platforms that you have found to be most impactful and why you like them?
So the main platform is YouTube, and I've never actually gotten any business off of it, but it's fine. I'll get some business at some point. It has brought credibility. I just wanted to get some information out there because I was so freaking frustrated about things that I couldn't find. So like whenever I find an interesting topic, I'm like, turn on the camera, do a 5-minute, video, and talk on the topic, because I have a team that can edit things. So I've ran several podcasts over a year, so I've got an editing team, and then I can do a bunch of stuff as well. And then I also, do some podcasts from some nonprofits here in town. But I think YouTube is, the YouTube University thing earlier, like I think it's just the greatest thing ever. Like it's so cool. You can share information, you can learn information. It's not necessarily short form content. So I'm not super big on like Facebook or Instagram or anything like that. I used to be more active on LinkedIn, but I feel like LinkedIn has really gone downhill in my opinion. I can't really put my finger on it besides the constant like selling,
Yeah.
which is super frustrating. Like I used to love LinkedIn. LinkedIn was my favorite
Yep.
platform for years. And then over the last 4 years, like I check in once a day just to see if like anything interesting is like somebody maybe move jobs or something like that. But yeah, YouTube is bomb. I love YouTube. And I love making YouTube videos. Honestly, if I put out a YouTube video and got 0 views, I would still be happy because it just like makes me happy to do the video. I just love them.
You like video over, do you do any blog posts, or is that sort of, in your opinion, a thing of the past?
No, I don't think it's an opinion of the past. I just try to make my life so that I work with my natural skills as much as possible to where I feel as little friction in my life as possible.
Yeah. Okay.
So me turning on a mic and talking is very little effort. Obviously I have to think about what to say, but like it's very little effort. It comes naturally, it flows. I can put it in my day, I can knock it out quick, etc. Writing a blog post, I can do it. But it's not my default instinct. So as a husband, as a father, friend, family member, community member, etc. Again, I need to keep it in the back of my brain. I need to keep as much energy as possible for all those different aspects of my life. So the less friction I can create in my life, the better, because I can actually, deliver where I need to for those parts of my life.
What advice would you give somebody who was thinking about starting to build content on YouTube or similar platforms, who were less comfortable on camera or with a mic
Hmm.
than maybe you are naturally?
That's a good question. My number one thing is like don't overthink it. It doesn't need to be perfect. It really doesn't. More than likely nobody will ever see it. So you can chill. One of the things that's actually beautiful in my opinion, especially if you're not getting a whole bunch of views, like if everybody's like, oh, I want to be a YouTube influencer, I'm like, you don't want that in the beginning because you want to be able to screw up and learn in private, basically.
Right. Yeah, I feel like even for me personally, that has been a real area of growth because I am a perfectionist in plenty of ways, and recognizing that content is actually more accessible when it's not perfect,
Hmm.
and that it's more helpful to people when they're actually talking to a human or listening to a human as opposed to a robot. I mean,
Mm-hmm.
that's why, I think AI is amazing, and there's going to be a ton, there's going to be, and there is already a ton of innovation that's happening there, both on the content side and on the mortgage side, but it won't replace a person.
Right.
It can't, because like personal connection is unique.
Right.
And like the trust that you can build, just like the trust that you build with your loan officer or financial advisor, cannot be replaced by a chatbot, in my personal opinion.
Right.
It can be augmented.
Right.
Similarly, when somebody is like learning and using YouTube University, as you called it, being able to really understand what somebody's like personality is matters.
Right. Right. Well, and it makes you, and the perfectionist thing, like it's important in so many different aspects of life. Like I promise you, what you just described has exponentially helped you in life get to the position that you're in right now. Right. It's just one of those things where, and there are certain times in my life where I could probably benefit from being more of a perfectionist. Right. It's more so just having that self-awareness and being like, okay, in this specific moment, this trait that I have will not help me.
Yeah.
How do I overcome this in this specific moment?
Yep. For sure. For sure.
But yeah, building that individual connection and building that credibility with people. And, if nothing else, it's just people getting to hear your voice. And after a while, they start feeling like they know you because they've heard you so many times.
Absolutely. Great. Well, is there anything that I haven't asked you that you think would be helpful for people to know or for us to chat about?
Just in general, that it's just a really interesting time to be in the real estate world, the finance world, the mortgage world, all these different conversations that are being had, because in my opinion, I think people have a real opportunity to differentiate themselves in the marketplace if they're actually solving a problem. If you're just going to be an order taker, this is not the market for that, because there's not that many orders to take, as we all know. As we've all seen the charts. But yeah, if you can differentiate yourself and make yourself, bring something. Here's what I would challenge every person listening to, because this is what I try to do every single day. A mentor told me years ago, bring something that is interesting and relevant to every person that you talk about.
That's great advice.
And the key is it has to be both. So if it's going to be interesting, it has to be something new, right? For it to be interesting. Nobody comes to you and says like, hey, you're in charge of Morty. And you go, huh, interesting. That doesn't happen, right? You're like, huh, self-evident, right? So it has to be interesting. So it has to be new information, and then it has to be relevant. So if I talk to you about, I don't know, the flower shop down the street, that's not relevant to you. You're like, I don't care about this flower shop. What is this dude talking about? So combine the two. If you can combine the two and bring at least one thing that's both interesting and relevant to every single conversation you have, whether it's a potential client, a COI, whatever, you will be memorable. I promise you.
I love that. Thank you so much for joining us, Jovica. This was great. It was a really fun conversation overall, and appreciate you joining.
Well, thank you. Appreciate you having me on. So for anybody looking to, connect with me, the easiest way to find me is you can connect with me on LinkedIn. I do check my messages in between all the spam and sales messages that I get. You can also go to workwithjov.com. That's workwithjov.com. It's got all my social media on there. And yeah, I'm an open book. Love to connect with folks, and reach out if you'd like.
Awesome. Thanks again.
That's a wrap for today. Thanks for joining us. And remember to like, share, and subscribe so you never miss another episode. And remember, you can't close if you don't disclose.